Home equity line of credit can help you with a myriad of financial necessities. It can help you with funds when you need them for whatever purpose. My name is Unwana Udoh. Every week, I share great content on how to improve your personal finance and grow your wealth. In today's video, you will learn what to do with your home's equity. A little disclaimer, I am not a financial advisor nor am I a real estate broker. Make sure to consult with professionals before embarking on any investments. Investments come with risk, so make sure to do your due diligence before investing. Owning a house is the greatest American dream. In addition, owning a house to save you from monetary needs adds up to the benefits of owning the greatest American dream. Now that you have enough equity in your property, it may be time to make use of your equity through a home equity line of credit. Although, you should be careful because putting your home as collateral may result in you losing your home if you fail to pay your debt. This should make you think before you embark on a home equity line of credit. However, if your purpose of taking out money by means of a home equity line of credit is to pay for medical bills, college education, or real estate investment, then it may be worth your while. Taking out money by means of a home equity line of credit can be your best option. If you want to consolidate your debt, a home equity line of credit may also be beneficial. This is because compared to credit cards and other unsecured debt, the interest rate in a home equity line of credit is usually much lower. Another benefit of this is that the interest payments you make may be tax deductible. Make sure to consult your tax professional for advice. However, having listed the benefits of a home equity line of credit, you also need to look at the possible consequences if you fail to pay your debt. The most important consideration is the possibility of losing your home if you fail to pay off the debt. Another thing to keep in mind is that the interest rate on a home equity line of credit is tied to prime rate, therefore if prime goes up, so will your monthly payments. It is recommended that if you are concerned about the interest rate on a home equity line of credit, you should consider taking out a home equity loan instead. This is because, in a home equity loan, your interest is fixed, which means your payments are also fixed. The flexibility of the home equity line of credit extends up to paying only the interests and paying the entire principal loan at the end of the term. In a home equity line of credit, the first 10 years is regarded as your draw period, and the next 20 years is the payback period. During the draw period, you are only required to make interest payments, however, you do have the option to make principal payments as well. This makes it quite hard, and if you are not ready for such balloon payment, the risk of losing your home is quite high. This is the reason why financial experts recommend that before you sign any contract that puts your house as collateral, you may need to scrutinize yourself a bit. Will you need the money lump sum? Then get a home equity loan. Do you need funds periodically? Opt for a home equity line of credit. If you found value so far, hit the like button and the notification bell so YouTube will notify you of my latest videos. One of the best uses of a home equity line of credit is for investing in real estate rental properties. In this video, my main objective is not to go into the intricate details on how to use your home equity to fund your real estate investments, but rather to open your eyes to the possibilities of using your home equity line of credit to grow your real estate portfolio. Unfortunately, most homeowners use their home equity lines of credit for personal consumption such as buying boats, cars, motorcycles, vacations, jewelry, etc. Smart homeowners realize the power of having a home equity line of credit and use theirs for real estate investments. The fastest way to grow your net worth is through real estate investing. Make sure to check my channel for a video I made on the net worth formula. There are many ways in which a person can make a living when it comes to real estate investing, some of them carry more risks than others. It goes without saying that those that carry the greatest risks are often the very real estate investment methods with the highest potential profit. Slow and steady wins the race. Flipping houses is the trend now since a lot of fortunes have been made doing this. Working with rental properties isn't nearly as glamorous and doesn't provide the instant profits that flipping houses might, but it is also a great and valid method of real estate investing. Rental properties are in demand now more than ever, with so many people going into foreclosure and losing the homes they've worked hard to build for their families. For this reason, rental properties are great assets to own. There are many reasons why people rent, and while there are some risks involved when renting properties, the risks are much lower than the risks involved in flipping or pre-construction investment. There are a few things you should consider when purchasing a property for the sake of renting in order to make a wise and long-lasting decision for your real estate investment. Only invest in rental properties in areas that people want to live in. It may be true that you can buy property cheap in a few very run-down sections of town, but it is doubtful that you will turn those properties into profitable rental units. It is best to pay a little more for a more attractive property for renters. You will find that your occupancy rate will be higher, which means you make more money. Next, pay attention to the types of people in the area and buy rentals accordingly. It is quite possible to turn large homes into multiple smaller apartment units, according to local zoning laws that are ideal for college students. You do not want to do this, however, in an area that is geared towards family homes and won't be friendly or tolerant of college students. Make sure to tailor your rentals according to the market you are attempting to attract. Third, don't be greedy. The goal of owning rental properties is, of course, to make money. At the same time, if you price your properties too high, you will find that they sit empty more often than not. Every month that your property is empty is a month that you aren't making money on that property at best, and a month that you are losing money at worst. Fourth, you must know your market. Study the local market for buying real estate and renting real estate. This will help with many things, not the least of which is figuring out whether a property will make an attractive rental unit. Another thing it will help you determine is how much rent the units will bring in every month. Finally, when renting properties, you need to keep your eye on your long-term goals. Property rental is a marathon rather than a sprint, with the greatest profits coming at the end. You want to pay as little interest on the property as possible and pay the property off as quickly as possible in order to realize the maximum profit potential and acquire new properties. The real money when renting properties as a real estate investment isn't in renting out 1 or 2 units, but 20, 30, or more. The more rental properties you own, the more money you stand to make from owning them. There are all kinds of avenues available to those that are considering real estate as a likely method of investing in the future. Why on earth shouldn't you? This is one way that millionaires around the world will agree to build great fortunes. At the same time, real estate can be a very risky venture for business, so you need to have a few more stable methods of bringing in money in order to have a truly diverse portfolio. Even within the world of real estate investment, you will find different ways of investing that each bear different risks. Commercial real estate is a good place to begin because it is relatively secure when compared to some of the other forms of real estate investing. The drawback with commercial real estate is that it requires massive investments. This is something that many real estate investors do not even consider until they have built a sizable portfolio and have lots of money at their disposal. It is stable because most businesses that lease from you will want to lease on a long-term basis. This means that when you get clients, businesses prefer to stay in one location as long as possible because it's bad for business in most cases to constantly be on the move. They tend to stay a while. House flipping. This is becoming a popular form of real estate investing, and many people have discovered that this is also a great way to make or spend money quickly. This is a high-risk venture, to say the least, but the rewards are equally high when a flip goes well. You have to decide if you are willing to take the gamble, as house flips are part skill and part luck. Residential rental properties. Becoming a landlord, while not as glitzy as owning business properties or flipping fabulous properties for instant profits, is a great way to work yourself into a rather comfortable retirement. This is a long-term type of real estate investment, but the payoffs can be rewarding. For cautious real estate investors, this is a worthy type of real estate investment to pursue. Pre-construction real estate. Pre-construction profits are even riskier than house flipping in many cases, particularly as it has become so popular in recent years. The trick with this kind of investment is finding the right property in the right market. If you can get in a city that is about to experience a housing shortage or is in the beginning stages of a housing shortage, such as a few desert and coastal communities have experienced in recent years, you stand to make quite a fortune for yourself. The problem is that this field is highly speculative and very competitive. Lease or rent-to-own purchases can often bring better profits. For many real estate investors, this is preferable to straight-up renting for many reasons. First, those who hope to own their homes are much more likely to take better care of their homes than those who are just renting. This means that even if for some reason they decide to move elsewhere and do not complete the purchase, you are less likely to require extensive repairs to the property. Real estate investing is a great way to grow your net worth. You must decide where you want to begin your journey into this lucrative field. Once you've begun your real estate investment career, it is a great strategy to diversify your real estate portfolio among different real estate classes. If you found value so far, hit the subscribe button and share this video with someone who could benefit from this. Also, make sure to check the description below to get your copies of my eBooks on credit and wealth creation. The next video on the screen contains information you will love. Click to watch that video now and I will see you there.